MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, there's news that the Ontario housing market has caught a second wind and things are getting busier. What are you seeing out there?
I'm seeing that the Ontario housing market is responding to inputs that were put into the market 2 years ago, and a few that were put in a year later. So the housing market in Ontario is starting to be misreported the same way your British Columbia market was misreported back in 2017 when they claimed that the market was getting busier again, only to find out this year that the market has slowed down again. So what happens with a housing market, Jim, is that there are decisions that people make 2 and 3 years before where they enter into contracts and those contracts have to be fulfilled, regardless of what happens to the housing market. So what I mean to say by that is that people may have decided 3 years ago to buy a new single detached home. They entered into a contract for that when the market was busy. 3 years later, the builder now is finishing that property and the people have to be prepared to move in. What they need to do to allow that to happen is they need to sell their existing home. So maybe 2 or 3 months ago, they had listed that property, it sold, and now they're going to close on it. All of those type of decisions impact your housing stats in a given month. This is why we say it's so easy for us to time the market. We are measuring all those different components of the housing market, and we know what's going to happen to the market before it happens, because it has to happen. If we're recording sales of brand new single detached homes at a $1.5 million that were sold 2 years ago, and we know those are going to close, say for the sake of the argument, in the spring of 2018 in Ontario here, that we were going to see some more expensive homes get listed for sale, because those are those people who bought those $1.5 million homes are probably living in a $1 to $1.2 million home today. But that property has to be sold in order for them to close on this one. So we're measuring all of these different components of the housing market all the time. And that allows us to understand what houses have to become listed for sale. So we know when houses are pretty much going to be listed for sale. There'll be maybe a 2-month window, but that's all that there is, Jim. It's not very big. And we know that those people whether or not they have to sell. Now, if they have to sell, Jim, that means and the market isn't busy, it means they're going to have to reduce their price. So in the resale market, we're measuring price reductions all the time. We're measuring where the buyers are buying in a given calendar month. So what they're recording in Ontario is basically the second wave, the same wave that BC had in 2017. Decisions that have been made in Ontario's case back in 2015 and 2016 are coming home to roost now. The same way that decisions that have been made back in 2014 in 2015 came home to roost in British Columbia in 2017. Once those things come back out of the market, then the market resets again, and it returns to where it was prior to the second wave hitting. And that's exactly what you're seeing out in British Columbia. You're hearing now 30% sale decline, 25% sale decline. Province-wide in British Columbia. In the month of July, the way that we measure prices, your prices have dropped $23,000 this month. You won't read this stuff anywhere because they're looking at the paperwork in front of them. We're not. We're looking at the market, how it's functioning right now, all of the components in the market over the last 2 or 3 years, how they're impacting today's market, and what they're going to do to the market 2, 3, 6 months, a year, 2 years out from now. These decisions are black and white. When you sign a contract, you cannot change your mind. This is how a housing market works. What we're seeing in Ontario, Jim, is exactly what we had forecast. It's simply that second wave coming over the market. It is the difference between Ontario, though, and British Columbia, Jim, is that sales are declining. The market was so slow. There was not enough momentum in the market to pick up the property. In British Columbia, you had a $37,000 boost to first-time buyers. So as your market was hitting that second wave, was coming to shore in 2017, you guys were a little bit luckier because you had that $37,000. Mind you, that $37,000 was removed this spring, and all of the data, all of it, reflects that change.
We'll have more with Ross Kay right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, it appears people are now admitting Vancouver is seeing lower condo prices. And last year, you stated there'd be a 26% correction in Vancouver. Why did it take so long for others to start sounding the same warning?
Okay, so first of all, Jim, I would say that warning was in the fall. The reading we took was in the fall of 2016. So we're coming up on almost 2 years for that 26% call. This goes back to like our previous question here that we just finished answering. What's happening in today's real estate market was predetermined by decisions made months or years before. There is not a home buyer out there today who wakes up one morning and decides that they're going to go out and buy a house later today. It doesn't happen. These are all plans that are set in motion months or years ahead of time. All of the groundwork is laid. All of the financing is arranged. Everything is already predetermined. If you are measuring all of those different components, you know what's going to happen in the market. So now you're hearing commentators about the British Columbia market jumping on the bandwagon about falling home prices. You're seeing them posted on Facebook pages. You're seeing some humongous decreases in price. When we commented in the fall of 2016 about a 26% house price correction had already taken place at that time, was because all of the components that impact the where the average selling price is going to go, we're already recording that 26% correction in the future. And now you're starting to see it. It's the same thing that's happening with the condominium market. All of a sudden now you're starting to hear pundits, bloggers, analysts, economists, maybe academics are going to start pretty soon. I don't think they've started yet. You're going to start to hear about declining condominium prices. Now, in condominiums, what most of these pundits don't understand is they're never measuring the same condominium. So when they say condominium prices have gone up 20, 30%, well, that's true. The average purchase price may have increased that amount, but that's got nothing to do with the house, nothing to do with the condo, nothing to do with the detached house. Because if I have $1 million to spend on a house, I go out in the marketplace and I look at all of the houses in my price range, and I pick the best house that I can buy for $1 million. Now, maybe last year, like in Ontario, I'll use Ontario's case to make it the easiest for this discussion, Jim. The city of Vaughan is a new city just north of Toronto. So that would be like out in Abbotsford, okay? It's a little bit closer, actually, but the same idea. Well, the new builders are building beautiful new homes up in Vaughan, just outside of Toronto. Now, if I've got $1 million to spend in the city of Vaughan last year, I would have purchased a home that would have cost $1 million. This year, if I got $1 million to spend, I'm going to spend $1 million to buy a home that costs $1 million. What the difference is, though, is that I can buy a home that would have cost me $200,000 more last year. The average selling price doesn't change. I still spend $1 million. What the people who are commenting about the housing markets don't understand is that the sales mix is constantly shifting. It's shifting every single month. The amount of house you're able to buy for your home buying dollar changes. In a rising part of the cycle, you continually are faced with getting less and less and less for your money. As the cycle rolls over and converts, you start getting more and more and more house for your money. You still spend the exact same amount. This is why you'll see buildings where there's a higher quality of condominium, their units will keep selling in a correcting market, where lesser buildings, those units won't sell. It's not that their valuations have changed. It's just that the buyers are now selecting a better quality. So the better quality homes hold on to their value in a correcting market for a longer period of time. The lesser quality homes are the ones that correct the quickest. And that's what you're watching happen out in British Columbia. In British Columbia, you also have to understand all of these pundits didn't build in the added sales from the $37,000 interest-free loan. When we're looking at in British Columbia right now, we've just recorded a $23,000 reduction in the sales mix, the amount of money. So in other words, if it's a balanced group of buyers, one first-time buyer, a trade-up buyer, an executive class buyer, a luxury class buyer. So you got 4 buyers. If you measured the exact same 4 buyers last month and you measured them this month, you'll see this month they paid $23,000 less. Unless you know how to measure the buyer mix and all those other components we talked about before, you're just looking at numbers. You're just looking at a myriad of numbers. This is the problem with selling prices, Jim. This is the problem when people say, oh, we want the selling prices. It's going to make a difference. It will make no difference. Because you have to understand the selling price has nothing to do with the house. It's got everything to do with the buyer and what they're qualified to buy. If I get an extra $200,000 worth of house this year versus last year, I don't care if my selling price is still $1 million. I am getting an extra $200,000 worth of house quality for my money. That, to me personally, as the home buyer, that is almost a 20% reduction. It's almost a 20% discount. But that's never recorded in the stats, Jim. So what you're hearing these pundits talking about now, oh, well, this is the market's slowing down, fewer sales, prices are lower. They're just catching up to what's already happened. And even in their commentary now, they're already months behind because they don't know how to measure all of the components. So for your listeners, they need to be looking for someone who can explain all these different components to them, because it depends on when you should be buying. Depending on the category of home that you're buying, the price point meaning, you should be buying at certain times of the year. At other times of the year, you should not be buying because the supply and demand pressures change. We're measuring the market all the time so we can give that kind of advice. And if we're wrong, you don't pay us. It doesn't matter. The beautiful thing about a housing market is if you're measuring all of the components, you can never be wrong. It may take a 2-year period of time for everybody else to realize that you were right 2 years ago, but that is inevitable. It cannot change. The market cannot change in a dime. It's how we knew that the sales had already been declining before the foreign buyer tax was put in. It's because it's how we knew back in 2013 that first-time buyers could not afford to spend any more money. And the only way the housing market could go forward is if with trade-up buyers. And we knew you would need more trade-up buyers the longer the upswing in sales continued. That would automatically create greater house price illusion. That's how you ended up with those 30% year-over-year claims of house prices. What you were measuring was a 30% increase in how much money the buyers were willing to pay. It wasn't the individual houses, because your sales mix continued to shift that entire period of time. And right now it's trying to get back in order.
We'll have more with Ross Kay right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, you continue to come on the show and tell our viewers that no one from Organized Real Estate helps home buyers. This week, the Canadian Real Estate Association will release their July update. What should home buyers take from what they're about to hear?
Well, what they should take from what they're about to hear, Jim, is that Organized Real Estate in no way represents home buyers. They are already releasing their stats from July. I just noticed the Canadian Real Estate Board earlier today releasing sales for the town of Bancroft. Now, Bancroft is a small, cottagey type town outside of Toronto here in Ontario, Jim. They were saying how sales had increased 30%. And this made headline. This is their headline. This is their out in their social media accounts. They didn't tell anybody that 30% increase in sales in that particular area were 15 houses. If you didn't know what they were talking about, you heard sales were up by 30%. And then you didn't know further that actually what happened was sales from June didn't get reported in June. They got reported in early July, so they were added to July sales totals. This meant that June numbers were a little bit lower than they should have been, and the July numbers were a little bit higher than they should have been. And that combined the two, their housing market was about, in grand total, about 2 more sales. But they called it a 30% gain. Who exactly did that benefit? That certainly did not benefit a single home buyer. If I'm a home buyer and I hear on the news, Canadian home sales stabilize. June has a rebound in home sales. Home sales stagnate while prices continue to increase. All of these things I hear may lead me to believe I should be willing to spend more money for the home that I want to buy. And that's simply not the truth. Where is the listing rejection rate published, Jim? You don't hear about the listing rejection rate. In other words, of the properties offered for sale to all the buyers in a community, how many did the buyers say, nah, we don't want those houses? They looked at them and they said, no, they're not good enough. When a buyer says, no, it's not good enough, what that means is your price is too high. That's another tip here for your listeners. The only reason a house doesn't sell is because it's priced too high. There is not a buyer out there who believes the house is worth the home buying dollars that are being asked for it. There is no other reason that a house does not sell. The only reason is the price is not correct. The easiest way to describe that, Jim, is the following. In the 25 years that I sold real estate in the city of Burlington, there was not a single house in 25 years that didn't end up selling. Every single house that was offered for sale sold. The only question was, how low did they have to reduce the price before it sold? And this is an exciting thing for your home buyers on the show, Jim, because it has been a very, very long time since we've been able to talk about a buyer's market, which is the market that we're in right now. Some provinces it's early, other provinces it's a little bit later. Quebec, we're still waiting for it to roll over. But everywhere else in the country, we're into a buyer's market. The beautiful thing about a buyer's market is that if you don't listen to real estate associations, real estate agents, you have an opportunity to get into the market at some time. I mean, if the prices are still falling, why would you buy? It doesn't make any sense to me. But there are people who may need to buy. So if that's the case, as long as you know where the market is going, and if you know that, let's for the sake of the argument say, for every 100 houses that were listed for sale last month, buyers rejected 90 of them. In other words, only 10 in 100 homes, 1 in 10 houses sold. 90%, the home buyers said, those houses are too much money. The question that your listeners need to ask is, why does organized real estate nowhere in North America express that to them? Why does not a single real estate board, a single real estate franchise company, a single realtor, any sales rep, anywhere, explain to people, hey, 90% of the houses out there, home buyers are rejecting. That means home buyers say those houses are too expensive. Why would you want to be the 11th guy? Why would you want to be foolish enough to be the 11th guy in the month to buy? 10 guys bought. Why would you want to be the 11th? When you're the 11th guy or girl, you get the 11th best house. The first 10 best ones are gone. Now you're down to the 11th. in 2017 when you were buying, there are parts of Canada where you were buying the 57th best house in a month. 57 of 100 houses were selling. There were only 43 houses where people were saying, oh no, they're too much money. That is a huge difference when you're buying the 10th best house versus the 57th best house. Why does organized real estate not tell the public, okay, this month, you're going to be buying the 11th best house? Or back in 2017 or 2016, in the spring of 2016, in British Columbia's case, you were buying the 57th best house in the street. Why don't they tell people that? Because they don't do anything for buyers. Your buyers need to know how to measure real estate markets this way. They need to be told the truth. And the big thing is, Jim, for me is, look, I'm not a housing bear. I'm not a housing bull. Housing markets, as long as you're going to own 20, 25 years, I don't really care. What I do believe is that the public can handle the truth. I do believe that if a housing prices are going to correct for the next 5-7 years, there are still lots of people who are willing to go out and buy that house, live in it, enjoy it, pay down their mortgage, and catch the upswing 15, 20 years from now. They're going to be quite happy with that life, and there's nothing wrong with it. We do a measurement, Jim, that where we measure your cost of ownership. So on the day that you buy your house, you know what your cost of ownership over the next 25 years is projected to be. That is really the only thing that matters. What you're paying for the house doesn't matter at all. In other words, what the asking price is. The only price you really need to know is, what is the cost of the house going to be over the next 25 years? And that's why home buyers are not provided with any representation at all by organized real estate.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. His website, thewealthyhomeowner.ca. Pretty simple. You're listening to HoweStreet.com radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at HoweStreet. Questions for the show or for our guests like Ross can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.